Welcome back, folks. This teaching will deal with target selection and profit objectives. Okay, target selection and profit objectives. The points of focus in this module will be measuring bullish weekly targets, where to anticipate weekly highs to form, measuring bearish weekly targets, where to anticipate weekly lows to form. Okay, folks, we're going to look at the examples I just shown in the previous teaching, the weekly bias. And we're going to assume again that our analysis led to a bullish analysis for this week under study here. And before we even consider running target measurements from the intraday price action each day, we have to have a premise in mind that sets the tone for this market to be bullish ahead of the weekly beginning or Sunday's opening. So we're going to scrub over to the left of our price action here. You can see we have the impulse leg here to the high. So we're going to run our fib on that using the lowest body open or close to the highest open body or close. Right there. Okay. Now we're going to put some horizontal lines in because these are objectives that could happen going into the new week, because as the market was closing here, it started trading on Sunday, declined Monday, and then Tuesday creating a beautiful hit on the 70.5 level for optimal trade entry. And we're going to put it on target 1, and I'm going to put it on target 2 up here, and I'm going to put one more at symmetrical price swing. So these will be our objectives relative to this price swing. Okay, since we're trading with a longer term idea in mind, we want to be looking for the move beyond this swing high to what levels it may reach for. Okay, so it's target 1, target 2, and then symmetrical price swing. So at that, we're going to take the fib off, and now we can go back zoomed in and look at some of the measurements we're going to do on the individual days. Now these levels will be, in my mind, going forward based on the previous swing. Okay, so now we have our chart back the way it was before. Looking at those projections. Now we have Sunday's opening here. Market drops down. Again, I've already mentioned in the weekly bias video, I'm not really concerned about Monday's trading. I want to see if I'm bullish, a move moving lower on Tuesday. So now we can take a look at some of the measurements in addition to and see which ones line up. So the bulk of what I'm going to teach you here is an overlapping or confluence of Fibonacci levels in the form of extensions. Okay, so right away we have this high back here that price has been moving lower from. What I want to do is incorporate that with a projection from that low here on Tuesday up to the highest body open or close here. And I got to put this actually a little bit, there you go, right there. So I'm looking at the body to body in this price swing. Why am I measuring this? Because what I'm looking for is the movement lower to pick up buy orders, and then once this high is taken out, how far up will we reach into in terms of price objectives? Okay, so and then I start looking for overlaps. We're kind of close with this target 2 to this one, but not that close. But then we have this level here, and this is where a little bit of thought is going to have to come in, because on the larger price swing we did when we scrubbed over to the left side of the chart and we drew those horizontal lines across, we have one target here and then another target here. But look what happens right in the middle of that. We have this level here. So target 2 lies directly right in the middle of that. So that's like an equilibrium concept. Right away I see that, and that draws my attention. So I'm going to draw now another horizontal line right here, and I'm going to change the color of this one to delineate why I'm drawing it, because this is all going to be based on this price swing and everything to the right of it. And you'll see what I mean as I go. So now I want to take another measurement of this open or close, highest one in this swing, keep it anchored to here, and see if there's any measurement up here that has a confluence. Again, this one's a little too far away, but look how far away we are here to what I just did on that equilibrium. So right away, this is another confluence. Now, how far away would I be willing to allow price to move? About 10 to 15 pips, depending upon the type of market structure there is. But anything more than 15 pips, I'm not really willing to let that be deemed a confluence. If it can be less than 10 pips, it's even better. And in this instance, we have 1928, 1924, so we're less than 5 pips, real close. Okay, and I'll tell you how we can pick a specific level in mind once I go through all the possible swings. All right, so we're looking at not this level here. And the reason why I'm not going to use this price swing is because we have this low and this low here, and then we drop down. So I'm not concerned about this one. Okay, so I'm not interested in this swing at all. This swing is the parent price swing. This is a subordinate price swing within the overall swing from this low to this high. So even though we traded down, came back up, it really was of no significance. So this low to this high is much more significant. Now we can start looking at smaller price swings and the optimal trade entry here. Okay, so we have the lowest opener close up to the highest opener close in this price swing. Price comes down, hits the 62% retracement level, optimal trade entry, and we start looking for extensions. Okay, we have the 300 extension within, again, less than 15 pips. So now we have another confluence right there. And now I'm going to measure every price swing that moves lower. So every price swing down, I'm going to measure that. So it's this one here. It's going down, picking up orders. Why am I looking for that? Because I'm looking for the expansion up the upside. Now watch, look what happens. Now we start seeing an overlap here. So we have one confluence here at that level. And we also have another one right here with the 500%. Okay, so you can already start seeing the grouping that's occurring right here. This little price swing here, why is this significant? Because it comes down and takes out an area of short-term low, where, but this is catching my eye. This would have caught my eye if we started breaking higher. Right away, I'd be looking for the highest body to close. I'm sorry, the highest and lowest opener close relative to each swing high and low here. And I'd look for another extension. And we don't need to draw another one because it's right on here. It's 200 extension. Okay, and there's really no confluence that need to be drawn here. So we can see that there's room to justify this level here. This would be a target, but we have a lot of grouping right up in this area here. So now what I'm going to do is I'm going to take that and just highlight it. Now I don't draw these boxes on here or these rectangles when I'm doing this. I look for just the levels, and I can start keeping an eye on where they're starting to group. Now once we have an area where they start to converge here and then over here, right away we're below that price level as we're coming up. So this is going to be a nice objective to reach for, which is basically the 119 big figure, because if you 118.98, you can go 2 more pips just with just a spread or chaotic price action would take us right up into that 119 big figure. If that trades through, then we'd be looking for an area in here where all these overlaps start to take place. So now I'm going to take all of the horizontal lines off to make it a little bit cleaner. And we can see that the lowest point that level confluence started was 119.24. And then we have the highest point comes in at 119.35. So you're stuck with the decision rather to go with what level are we looking for. And here's your choices. You can be conservative and get out at the 20 institutional level right before all those confluences agreed. You can get at 119.25. You can get at 119.30, round number, or you can hold for 119.35 because there are 5 levels, 0 levels, and obviously the 119.20 is institutional level, waiting for the confluence of target 2. So this is target 2 on that price swing we had relative to this swing here. So all I'm doing is measuring all of the possible overlaps of the Fibonacci and looking for an agreement on a specific area. Then I'm either picking a 5 level or a 0 level. The closer I can get to an institutional level, the better. Truth be told, 119.20 would be my level, and I'd look for that only, and I would miss out on all the remaining portion of the move. And we're going to do similar things here. So we have, again, a sell idea. So we're looking for where is going to be the objective we would reach for covering our short positions. If we have a bearish week in mind, what type of things would we look for overlapping for target selection and profit objectives? Well, we're going to be looking for any movement up is meant to be gathering sell entries to go short. So we want to be focusing on that. And we'll draw our fib up. And first and foremost, I like this swing here. And we also have an equal low down here. So right away, I'm already thinking if we're bearish on the week and we're lucky enough to get in here and get short on Tuesday, if this occurs, my mind's thinking 20, 30 pips below this low. They're equal lows. They're probably going to want to reach for that, and we'll come to that in a minute. But for now, we're going to look at the overall price swing right there. So we have an initial confluence for target 1 on that parent price swing here. So again, the idea is it starts here, it runs higher, they sell more, they sell more. Finally, they price in the weekly high, and it starts to break down. We want to see this low broken, but how far will it go? It can go to target 1 or target 2. And just to save time, we won't add the symmetrical price swing, but you would add it, and you would look for other confluences. But we had the benefit of hindsight here, so we'll stick with that just for the purpose of keeping the video short. And you'll see that there's confluences that line up with this one here a lot. So let me keep both of them in frame. Okay. So now we can take every price swing. So now I don't like this one because it was part of a consolidation, and we basically came back into that same area. So I want to look at the lowest open or close here to this open or close in the swing high up here. And right away, we can see another symmetrical price swing overlapping. So this is what I'm saying. It takes a little bit of work and thinking to figure out which levels you're going to be aiming for. And now we can start doing Fibonacci extensions on the optimal trade entries. So we have 300 extension down here. So we can look for that level right there. And we have another optimal trade entry. I'm going to use the bodies of the candle. Lowest body candle here. And highest open or close on this swing here. Optimal trade entry sell on Wednesday, leaving the opening on the week. Start to expand. Then we have 200 extension down here. Right there. And we're a little too far away, in my opinion, for this one to line up. So again, all the groupings still around this level here. And we're also going to look at this swing right there to here. So we're looking at the overall price swing from this high down to this low. Right here is what I'm measuring. And why am I doing that? Because that's the biggest dynamic price move. So I want to see if this is going to be replicated, and we get that same measurement. It's a measure move idea from this high to this low using the bodies because it's the bulk of the volume, and then projecting it down again would take us right to here. So we have an overlap there as well. Okay, so we can see a tight grouping around here. So we're going to leave no interest with this one here because there's a lot of overlap here. So we're going to just shade in again this area here. This is going to be the bulk of our interest. And we're going to delete all the other horizontal lines. We'll just leave one for target selection purposes. Okay, so the top of that shaded area where the uppermost overlap occurred comes in essentially at 126.89. The lower one comes in at 26.81. So we have a range of 8 pips. Not bad. So we can look to take our profit. Again, we're selling short this week in theory. So we're looking at 126.89. So above that would be what? 126.90 round number, or 126.95, which is what I would look to get there, because the lowest portion of that range was down here. So if it's going to reach as far as that by our overlapping fibs, that means 126.81 could be the low, but then you have to factor in the spread, dollar CAD. So you may end up getting, 26.85. That would be and that's the best case scenario. Okay, so 26.85 may get you out if it trades at 26.81. You think it's going there and you want to cover, you got to add your spread to that. So we'll say 26.85 would be your limit to get out. I want to be out before that. I want to be out at 26.95. I want to be just a little bit ahead of all those overlapping fibs because I want to make sure I get my price. So I'll always leave a little bit on. That's why I see most of my exits. I always have that little bit of a tail of a move left. I just want to be out. I don't want to be in there, demanding. I get the very lowest low. I can call that and make that public and look like a rock star, but I am hardly ever really in those moves all the way to the end because I don't trust them. And think about what we're dealing with here. We're dealing with Fibonacci, okay? And we're also looking at a variance between everyone's delivery on the price. Everyone's price is going to be slightly different. And that's the reason why I teach you to use the bulk of the volume with the body of the candle and not the wicks. The wicks are always going to be slightly off relative to your brokers, okay? And there's a lot more to this that I can teach you by way of the mentorship, but this is certainly well enough for those individuals that can't afford to be part of the mentorship or just don't have it in mind to ever want to do it. That's fine. That's cool. I'm not twisting your arm, but I've given you enough here to find reasons to suspect a highly probable target for weekly objectives. Until next time, wish you good luck and good trading. Hopefully you enjoyed this presentation. If you'd like to find more, you can visit my website at theinnercircletrader.com.